All right, welcome in everyone, welcome in. What I'm going to be doing here is I'm going to be overviewing and showing you the three exact elements to identifying a key reversal. This is it. This is what you need, nothing else. Block everyone and everyone else outside of this, because when you really strip it down and simplify it, this is all you need to identify and get a part of a high quality reversal and actually make money off of it like I did. And in this specific example here, this is how I was able to secure a $1,500 payout from this trade that I'm going to be showing you here. So three elements. Well, before I get into the three elements, we need to understand that we need the higher time frames first and foremost. What is the daily down to the 1 hour suggesting before we get down to the lower time frames? Well, if we go ahead and pop up to the daily chart, okay, what you're going to find out here is we're actually up in all-time highs here, okay? Same story majority of this year, right? We come up, we clear these two clear daily buy-side liquidity highs here. Now, why could we expect at this point in all-time highs some type of reversal to perform now? Because it's Friday. If you take a look here, we have Monday, Tuesday, Wednesday, Thursday. Majority of the week has been directionally higher. And on Friday specifically, with key signatures that I'm going to get into in a minute, we can expect and anticipate at least 20% of that weekly range to be worked back in. Okay, so with that said, let's pop down to the hourly chart. Looking at the hourly chart here, as you can see, here's that buy side liquidity pierced. As I explained on the daily chart, we work back up an all-time highs here. And at the same time we do this, right, we rally up here inside the session, we go over to ES, and you're actually going to see that ES completely and entirely failed to even reach Thursday's previous daily high. As you can see here, ES was relative weakness, showing a bearish SMT divergence. So that's just one added confluence to what I'm going to be showing you guys here. Now, come on, get to the point. What are the three elements here that we need to find the reversal in? Well, let's go ahead and do that right now. Let's drop down to the 5-minute chart, and I'm going to go ahead and put some annotations on here. Okay, now wait a minute. Let's back up for a second. We're going too fast. We need to back up, go back to the higher time frames. What are we going to be targeting on the opposing end? Because if you don't have a target with a trade idea, you have nothing. So prior to me showing you the three elements, all right, I'm getting there, I promise. We have this huge new day opening gap. This is going to act as a magnet on price slash fair value. Okay, so we have this right here. Here's previous settlement daily closing here on Thursday. And here's the true day opening. You extend that range out, and that's what we draw into, as you can see right here. So this is going to be that main magnet on price. Now, before this, also with this new day opening gap, we also have this real long-winded stacked up trend line sensation here. Okay, so we have a higher low, higher low, higher low, so on and so forth. And every time we do that, that's just stacking up what we call trend line sell side liquidity. So I know that this is going to be a high probability target with the new day opening gap hovering below it. Now, another thing is how we let these relative lows here internally behind. And then we enter 9:30 opening. This creates a rally to the upside. And here's what I'm going to get into, the three elements of looking for a high quality reversal. Assuming that price is offered above that opening, right? So like right here, here's our 9:30 opening, price is offered above. That's going to add and put these elements that I'm going to be showing you here on steroids, okay? So first and foremost, now that we have the draws to the downside, what I'm going to be looking for, element number one, it's bearish market structure to form. And what I mean by that is after price is offered above that opening, you want to see an intermittent term high formed. And what is that? That's just simply a swing high formed. And then we have a lower swing high to the right and a lower swing high to the left. Okay, that's an intermittent term high. That is element number one. And we have that right here. There's an intermittent term high formed. And then we displace, which leads me into element number two. You want to see some type of displacement breaking through an opposing array. And in this example here, we have this 5-minute fair value gap. That's our first presented opposing array. What do? No problem whatsoever. Slice straight through that. Not once, but now twice. And now we close below it. So this is invalidated. And now this leads me into element number three. What is element number three? You've been waiting for it. It's the best one. And this is all the confirmation you're ever going to need in the world. After we show our hand with element number one and two, we create this rally here. Why is this significant? This is going to lead into a change in the state of delivery. We have buy side of the curve delivered here, and then that's immediately slams down and met with sell side of the curve. That right there is a change in the state of delivery. The markets were first offering buy side delivery, and now they're offering sell side delivery in such a quick span of time. That's a change in the state of delivery, and what we look for now is price to return back up into that up candle, and that's going to be where smart money is accumulating their short positions. Okay, and whenever it trades up into that, why do we expect that to happen? Well, classic bearish institutional order flow tells us that all up candles in a sell program should be respected, and we do just that. We create an up candle here. What do? Rather up into there. We go beyond it a little bit, right? The body. But what does the body do? It closes significantly below this up candle. Respects that. Boom. Trades off. And this right here is going to be the most high probability entry point you will ever find in your life. These are the three elements that I used to identify a high quality reversal. Notice that this was only valid because the higher time frame was in support of it. So always have the higher time frame in mind when you're looking for these three elements, and it is going to be very, very hard for you to fail if you can apply the proper psychology along with these elements here. So hope you guys got something out of this. If you did, hit the like button and maybe drop a comment. So catch you guys in the next one.